Japanese consumers are closing their wallets as the economy's outlook darkens, making it harder for Prime Minister Yoshihiko Noda to stave off the nation's third recession in 4 years. Households are holding the most cash since 2005, shunning risk as they grow gloomier, Bank of Japan data shows. Sliding private consumption contributed to an annualized 3.5% decline in gross domestic product in the past quarter, the Cabinet Office report showed yesterday. While Noda may avoid a fiscal cliff as the opposition becomes increasingly open to a deal on deficit financing legislation, the consumer malaise highlights the challenge of reviving growth in the world's third-largest economy. At the same time as he tries to rebuild relations with China to support exports, Noda may need to come up with more incentives for consumer purchases at home. The Japanese government has no choice but to implement additional measures to shore up the economy, said Junko Nishioka, chief economist at RBS Securities Japan Limited and a former BOJ official. The dispute with China, the decline of the stock market, and confusion over the political situation in Japan are hurting confidence. The Nikkei 225 stock average Nikkei was 0.3% lower at 11:07 a.m. in Tokyo, heading for a seventh day of declines and about 15% below this year's high in March. Weak sentiment on the economic outlook was the weakest last month since the aftermath of the 2011 earthquake, the government survey showed, with the end of car subsidies and a looming sales tax increase also making people more pessimistic. Japan risks its third textbook definition recession since 2008, meaning 2 straight quarters of contraction. The median forecast in a survey of economists by Bloomberg News is for an annualized 0.4% contraction in the September to December period. Japanese recessions are officially defined by a government-charged panel that considers data beyond GDP figures. We need a firm response considering the grim outlook for the Japanese economy, Economy Minister Seiji Miyamoto told reporters today. He declined to comment on the size of any new fiscal stimulus measures. Consumption in the third quarter dropped at an annual rate of 1.8% after a 0.4% fall in the previous 3 months, the first back-to-back decline since the global financial crisis. Yesterday's report from the Cabinet Office showed conditions worsening. The main index in the government's Economy Watchers survey, which looks at how people feel about the outlook for the next 2 to 3 months, fell to 41.7 in October, the lowest level since the aftermath of last year's earthquake. The figure under 50 indicates that more people see conditions deteriorating than improving. Respondents to the survey included a travel agent in the Tokai region of central Japan, who complained that territorial disputes with China and South Korea were deterring people from traveling abroad. The car salesman in Shikoku, southern Japan, said the end of government subsidies for fuel-efficient cars was hurting business, while a supermarket manager in the same region noted concerns among shoppers over a planned doubling of the sales tax. In other economic releases today, Japan will announce the final reading of September industrial production after preliminary data showed the biggest decline since last year's earthquake. In a separate report released today, Philippine exports gained in September at the fastest pace in 21 months as demand from Asian economies including Japan and Hong Kong rose. Global economy Spain, Italy and the UK will announce price data for October. France will probably announce that non-farm payrolls fell 0.2% in the third quarter, the second straight decline, according to a Bloomberg News survey. Brazil retail sales probably rose 0.2% on month in September, matching the previous month's gain, according to a survey of 39 economists. The Japanese government announced on October 26 the 750 billion yen $9 billion stimulus package to shore up growth, the scope of which was limited by the political standoff that is blocking legislation to allow borrowing to pay for this year's deficit. The measures compare with more than 20 trillion yen in spending to boost the economy and pay for rebuilding budgeted after the March 2011 earthquake and tsunami. Political paralysis. The government has few tools to boost the economy as its term will end soon. The budget deficit is so huge and political paralysis means it's hard to agree on measures, said Hiroaki Muto, the senior economist at Sumitomo Mitsui Asset Management in Tokyo. The opposition Liberal Democratic Party is likely to accept a deal offered by the ruling Democratic Party of Japan to end the stalemate over legislation to fund the rest of this year's budget, LDP policy chief Akira Amari told reporters in Tokyo yesterday. Worsening sentiment may be filtering through to the investment market, with BOJ data for this year showing that holdings of securities such as stocks, bonds and investment trusts as a proportion of household assets are at the lowest since 2005. People have no incentive to take risks, said Masamichi Adachi, the senior economist at JP Morgan Securities Japan Company in Tokyo and a former central bank official. They are just putting money into banks, and it's very unlikely they will move to securities in the future. Job losses: companies are cutting jobs and trimming pay as profits fall. Renesas Electronics Corporation, 6723, the world's largest microcontroller maker, plans to cut thousands of jobs, while TDK Corporation, 6762, the manufacturer of electric components, will shed 1,000 domestic positions. Sharp Corporation, 6753, Panasonic Corporation, 6752, and Sony Corporation, 6758, posted record losses last year, and are cutting jobs and production lines in a bid to return to profitability. Large businesses cut winter bonuses by 2.7% from last year to 781,396 yen, according to a report last week by the Keidanren, a business lobby. Machinery orders, an indicator of capital spending, fell the most in 4 months since September, and exports dropped 10.3% in the same month. Net exports, for shipments less imports, subtracted 0.7 percentage point from GDP on a quarterly basis, the biggest decline in 3 quarters. Noda this year pushed legislation through Parliament to double the sales tax to help fund welfare spending in the world's oldest society, and has said he will not call a general election unless a framework for revamping the social security system is established.